Credit scoring transition for mortgage underwriting and consumer impact. 1. Executive overview. You evaluate claims about a cancellation of the FICO score and explain the actual policy direction that expands mortgage underwriting to include VantageScore 4.0 while leaving non-mortgage credit markets largely unchanged. Footnote. This section distinguishes rumor from policy and sets the scope of analysis. 2. What is changing for mortgages? You explain that mortgage investors plan to accept VantageScore 4.0 in addition to updated FICO models on a phased timeline beginning late 2025 with broader operational use from 2026, which affects secondary market eligibility and lender workflows. Footnote. This section identifies the addition of VantageScore 4.0 to mortgage pipelines and the expected cadence. 3. What is not changing outside mortgages? You state that FICO remains widely used for auto loans, credit cards, personal loans, and many non-mortgage decisions, so consumers should continue to manage and improve FICO profiles for broad credit access. Footnote. This section rejects the claim that FICO is canceled and preserves its central role beyond housing. 4. VantageScore 4.0 features. You note that VantageScore 4.0 can incorporate additional verified payments such as rent and certain telecom accounts, uses trended data, and is designed to score more consumers who have thin files or recent histories. Footnote. This section highlights inclusion of alternative payment data and expanded scoreability. 5. Effects on thin credit files. You explain that borrowers with limited credit histories may gain eligibility because on-time rent and similar payments can improve decisioning, with entry score cutoffs reported in the mid-600 range at some programs. Footnote. This section connects alternative data to potential approval paths for first-time buyers. 6. Conforming versus jumbo context. You distinguish conforming loans that can be sold to government-sponsored investors from jumbo loans above local limits, noting that lenders prefer conforming pipelines because they can sell loans and recycle capital. Footnote. This section explains why model acceptance in the conforming channel matters for access and pricing. 7. Operational mechanics after closing. You describe that many originators sell closed conforming loans into the secondary market within 1 to 2 months while continuing to service payments, so score model acceptance influences saleability rather than the consumer payment process. Footnote. This section separates servicing from capital markets execution. 8. Consumer strategy during the transition. You advise maintaining low revolving utilization before statement dates, avoiding rapid new account bursts, enabling verified rent reporting where reliable, and keeping perfect payment histories on any buy now pay later lines that may report. Footnote. This section translates scoring mechanics into concrete household actions. 9. Market tightening and risk posture. You note that lenders have signaled stricter underwriting when delinquencies and charge-offs rise, so stronger FICO files and stable income remain decisive even if VantageScore improves scoreability at the margin. Footnote. This section warns that macro credit conditions can offset gains from model changes. 10. Homeownership planning. You outline options that may pair with the transition including first-time buyer programs, low down payment products, and builder incentives, while recommending fixed-rate amortizing loans for payment stability over time. Footnote. This section ties policy shifts to practical entry paths for prospective buyers. 11. Misconceptions addressed. You correct the viral claim that a political figure canceled FICO, clarify that both FICO and VantageScore will coexist in housing, and restate that other credit markets continue to rely primarily on FICO. Footnote. This section eliminates the cancellation narrative and emphasizes coexistence of models. 12. Action checklist. U1 pull current reports from the 3 bureaus. 2 map statement dates and precut payments. 3 add verified rent if available and accurate. 4 avoid short-term utilization spikes. 5 document stable income and reserve. 6 confirm whether a target lender uses VantageScore 4.0 in the mortgage channel. Footnote: this section condenses the report into immediate steps aligned with the transition timeline.